In today's video, we will review some very important economic data, such as CPI, PPI, unemployment, and so much more. My name is Anna Eckstein, Naples Ultimate Luxury Group, MVP Realty. And I decided to make the video shorter. So if you do like to view Southwest Florida real estate market update, I will attach the video at the end of this video as a link. So let's start. All right, so let's take a look. Just wanted to give you a small update by GDP growth rate. And the US economy expanded annualized 3.3% in Q4 of 2023. It's actually a much more better forecast that was at 2%. So the following in the Q3 is 4.9%. Well, it seems like we are doing really well as far as economy grow. So the last meeting when Fed actually the decision about the interest rate, so the Fed decided to keep the rate at the current pace, which is 5.25% to 5.5%. And this is the fourth consecutive meeting that they decided not to raise the rates. And there was an indication of that the expectation would be the obviously the goal of federal government is to bring the inflation down to the 2%, and the anticipation of the rate cuts, of course, is coming in 2024. The anticipation was as early as March, but I think the anticipation kindly went away, and now we'll see if this will be more mid-year rate cuts. But I believe at some point the federal government facing a lot of different troubles with economy, and I think a lot of the reason why federal government will be on a big pressure of actually cutting the rates this year, it has to do, at least in my opinion, has to do with the commercial real estate. I believe that commercial real estate is in a lot of trouble, and they do need to refinance. And the rates, what it is right now, is just very unaffordable for those people, for the commercial real estate to refinance. And I think a lot of the federal government, obviously, with anticipation that the inflation is going down, and there's a lot of help needs to be done through the economy with the rate, interest rate will be lower. So I would like to share with you the mortgage rates, where the last was recorded, the 30-year fixed rate with confirming loan balances of $726,200 or less, rose by 2 BPS points to 6.8. And this was the week ended in February 2nd, 2024. With a lot of people would anticipate that, well, is our housing market continue to go down? Like, what happened? So, I mean, obviously we don't have a crystal ball to see what can happen. But I believe once, and we'll see, of course, but I believe once the federal government decided to cut the rates, to continue to cutting the rates, and I believe that brings a lot of the demand back to the market, especially for those people who just, the prices for the properties rose so much that it's just, with rates to be so high, it's just the real estate market just so unaffordable for so many young people. So we'll see how the 2024 will bring those rates down, expectation of the rates. And this is something I did another video that will be attached at the in a link at the end of this video. The expectation of the rates going down actually under 6% by the end of the 2024. So let's see if that can happen, right? Because as we know, the CPI report that we was reading for the January, for the month of January, is actually take up in a higher rate that was anticipated. So the annual inflation rate in the United States fell back to 3.1% in January, following a brief increase to the 3.4% in December, but it came higher as a forecast was predicted, but 2.9%. Again, target rate is 2%. The consumer price rose by 0.3%. Anticipation expectation was 0.2%. So that came in a little bit hotter than expected. The core, that's excluding volatile items such as food and energy, it's also sticky. And we call on this channel that I think, once the inflation is hit the 4% target rate, it just become very sticky for the Fed to fight. So hopefully the inflation will continue to go down, but you can see, like, even on the chart below, that's inflation that we had since the June, let's say August. Since August, we're really in that 4 category sticky number. And you can see even from the expectation for the January forecast was 3.7, come in actually at 3.9. Well, that's exactly the same what we had in December, 3.9. So it didn't really move. In next chart, I will show to you like what those differences would be. And actually it rose by 0.4%. It was expectation with 0.3%. So, and if we take a look, the chart below, this chart right here, so you can see actually, if you can compare even December to January, so you can see the food rose by 0.3%. The food at home rose by 0.4% from 0.2%. Food away from home, 0.1%, rose by 0.4%. The energy also rose. You can see the rest of breakdown. This was services. Take a look, the services from December from 0.4 rose to 0.7 month-over-month basis, right? On a 12 months basis is still 5.4. So think about the target rate is 2% for the Fed, right? So they still have a lot of work to do. And shelter, you can see they still come up at 0.6% month-over-month and 6.0% on an annualized basis. The transportation services still high at 9.5%. Look, medical care come in hotter, 0.7 month-over-month. So, there's still work to do for sure. And that's why, when I'm thinking about this interest rate cuts, this is only one reading that come in like really hotter than expected. So we'll see what the next one will be coming for February readings. So we will have in March that reflect in February. So we'll see if this is just the 1 month that was coming in kind of fluke of hotter than expected, or this is something that inflation is now on a rise. So we have to wait and see. The producer price index, that's what the cost for the producer to produce. So if that come in hotter, again, if the producer cost on a rise, then eventually they will transfer that to the consumer. So that come in hotter than expected as well. And you can see analyzes the annual producer inflation in U.S. edge lower to 0.9% from 1% in December, but expectation was actually to 0.6%. So that come in hotter than expected. And you can see that core, that's excluding volatile items such as food and energy, and that rose 2%. And you can see the anticipation was 1.6. Last read was 1.7. So it seems like that core inflation is really sticky for the producer and for the consumers. And you can see month-over-month basis expectation was 0.1%, but came in hotter than expected, 0.5. So that's pretty big jump just in 1 month from 0.1 expectation to 0.5. So again, we'll see if this is just a 1 month kind of situation or there's something more to be alarmed alarming. And for the Fed, obviously, they will be meeting in March. They will have another CPI reading before the meeting for the interest rate decision. But I think pretty much expectation of them cutting in March. I don't think that can happen, especially after the CPI reading. And they're all kind of data depending. So we'll see what happens. So I don't foresee them to cut the rates in March, but maybe by June, maybe that like again, data depending. So we'll see what happened to the for the next few CPI readings, and then we'll see what the decision would be. So the non-farm payroll, this is something that we would need to pay attention as well, come in actually very strong in the month of January. We added 353,000 jobs just in the month of January, which compared to the revision. And actually, if you think about, I've been tracking these jobs, and I don't remember the numbers, but pretty much every month they come back with the numbers. They go back and they do revision. So we'll see. I mean, I don't know what to believe on these numbers. But unemployment rate in the United States held at 3.7%. So obviously, in the eyes of, at least in the books, our economy is doing really well. But I do believe that there's a lot of trouble, and I don't know how you can fix them. I mean, look at our deficit, over $33 trillion just in that. I mean, it's just crazy if you start thinking about what kind of bubble of the debt we're living in. It's scary. And I don't have with me the data, but the last week the data for the come in for the manufacturer, it's a little bit better than was coming in before, but it's still, there's a lot of sectors that are in troubles. Retail's come in really weak compared to the expectation. So like I said, we'll see as we continue moving and navigate towards to 2024. So the number of people claiming unemployment benefits fell by 9,000 to 218,000 from the prior week. And this is the February 2nd report. Continued jobless claims, still people receiving. So it's in 1,871,000 in the week of the January of 2024. This is a breakdown for a government payroll. So you can see from January to the December, manufacturing, the non-farm payroll as well. So this is my last chart for today. And again, if you do like to watch Southwest Florida real estate market report, please don't forget to click on the link that will be attached at the end of this video. Thank you for watching. My name is Anna Eckstein, MVP Realty, Naples Ultimate Luxury Group. If you are thinking of moving to Southwest Florida, or if you are thinking of selling your property in Southwest Florida, please get in touch. I would love to be your local agent. I hope you found this information helpful. And if you did, please consider liking the video and subscribing to my channel. This will help me tremendously to reach and help more people. And if you want to have the latest market report for Southwest Florida, please click on the link above. Thank you.
Baby, you give me ice and fire. You're giving me wind and rain.